Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video is for Wednesday, September 5th, 2012. My name is Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com. All right, folks, markets are fractionally lower today, very minor down Wall Street. S&P down 1.5 points, NASDAQ down 4, and the Dow is actually up slightly, up 5 points on the day. The key again continues to be obviously light volume, although it's increased now over the last couple days from where it was a couple weeks ago, and that's now that traders are back at their desks, kids are back at school, essentially people are back at work focusing on the market. So you're getting a little bit more volume, although it's not drastic just yet. And the markets today are also quiet because you're waiting for word from Draghi from the ECB tomorrow. Are they going to be buying bonds? That's the key. All right, so bond buying there is a possibility, and then obviously we get the ADP private sector numbers tomorrow, as well as on Friday the non-farm payroll. So these are all keys that the market's kind of on pause until we see those numbers. One thing though you have to be aware of, and I think is very important. I mean, every day we're getting a rumor of ECB bond buying, all this kind of stuff, and you're not seeing a massive upswing in the markets, which tells me that the markets are a little on the overbought side and tired. Now, ultimately, we're going to see a bond buying program, I'm sure, from the ECB. But again, it doesn't look like it's going to cause a massive squeeze for multiple days. Could we have a one-up day? Sure. Maybe even two. But it doesn't look like it's going to have that much of an impact, mainly because it's already been factored in. The markets know it's going to happen. Therefore, they've adjusted their prices to be at those levels per that announcement. All right. Interestingly enough, on an intraday basis here, you can see the markets have been a little whippy. You opened with a little bit of selling. You moved up back to this little pivot top from yesterday. Perfect little shorting opportunity. Notice how the pivot high from yesterday worked as a great short for today, intraday. Markets then reversed 50 MA, back up, sideways, 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 sold, and now you're making a little bit of a bearish pattern. This is actually a bearish pattern that may be worthy of a trade later this afternoon, although the one thing I will say is that volume is so light, it's tough to short. Remember, shorting should occur in normal volume environments, very tough in light volume to short and make money. But again, this pattern is good. 3 moving averages above current price, inside bars inside of this drop, and again, that is a bearish pattern of consolidation. I'll decide later on if it gets to the point where I like it or if I decide not to take it. One way or the other, I'll let my intraday stock chat members know. All right, so that's what we have going on here on an intraday basis. Yesterday, we got one of those rallies late in the day based off rumor. It's exactly what I keep talking about here, where the rumors come in, but even that rumor mill pushed the market up, and then it pulled back, and now we're basically inside of that area. From this low to this high, you're basically in the middle of where the market's been, so you're not seeing that continuation rally. Looking at a couple other key plays out there, obviously the dollar is very important here. UUP is hovering slightly lower on the day, down 3 cents, but the key here is just to note this level. I mean, this is your key level on the UUP. This was the master level I talked about to my members as being the key low. I did say I thought the market would, or I should say the dollar would hold this level. So far, that has been the case. And I continue to believe that. I really do think that the dollar is at the short-term low level right now. All right, so just something to keep in mind. Now, if it breaks this and confirms, then it could easily go down to possibly all the way down at this lower level down here. But right now, anyways, it seems to be a little bit more in the range of a possible bounce based on a little short-term oversold into support, and obviously we're waiting on Draghi's comments and the non-farm payrolls in the next few days. Taking a look at gold today, gold did pull back. GLD down 47 cents. That was after that monumental run on Friday, and then Tuesday, small update. Today we're pulling back, giving back the update from yesterday. Really, in terms of support resistance levels, if I show you the charts right here, you are looking at a short-term resistance level right here. See this pivot high? And then even if you go up a little bit higher, there's not much more upside. You have a good amount of resistance right here above the 166 level on the GLD. So resistance, resistance, and now support and support. So resistance support lines on the daily GLD chart. SLV is also pulling back a little bit today. That has had an unbelievably extended move. Short-term resistance is right there. You can see it hit that yesterday, is getting a pullback today. The USO continues to be under some pressure, although only down 3 cents on the day. Yesterday we had a nice dip on that. Notice the 20 MA. Once you get below this on a closing basis, I do think you're going to fall very quickly on the USO on oil all the way back to the 50 MA. So keep an eye on that. Again, I do think oil is heading back to the recent lows from a few months ago down the line, although just not yet. Taking a look at some other stocks, one of the leaders today is Goldman Sachs. Great move on Goldman. One of the reasons why the markets probably aren't down a little bit more. Goldman's up $3.25. We really haven't seen an up day like that on Goldman for quite some time. But if you're looking for resistance, this is it right here. See this little pivot gap fill? Look at this. So you still actually have a little bit more possible move up in Goldman Sachs over the next few days, maybe to about the 111.50 level, which is only $2 more. But I think if you hit that level on Goldman, that's where you start to meet significant resistance, and I'll actually get interested in a possible short on that. If you continued up, where would your next level of resistance be? Very clearly around the 115 level, and then ultimately this pivot would be the next one. So those are your resistance levels on Goldman Sachs for now. Chart again continues to get extended. Great fall. Longer term, this is a macro bear flag. Be aware of that. So it does tell us that Goldman could come down the line, but short term you want to wait for the levels of resistance before you take a short on it. I think right here would be a very intriguing short if it can get there tomorrow. Okay. JP Morgan Chase, even though Goldman's having a great day today, JPM is not having a very good day. Up 6 cents on the day, but I mean comparative to Goldman, that's essentially a flattish day. And the pattern here could be slightly bearish, so we have to be aware of JPM's downward move sideways inside bar just below the two moving averages. Not a lot of downside because ultimately you'll meet support at the 50 MA, but that is a little bit of downside nonetheless that it could be shaping up for. Apple, after a very nice day yesterday, is trading down about $3 on the day. Pattern-wise, I don't see much here. There's not much of a trade that I can see showing up in the charts based on the PPT methodology, which is our proprietary methodology here that has created massive gains over the last couple of years for members based on the hot charts and alerts, swing trade alerts, etc., videos and so forth, which come with the Research Center. And again, the Research Center is part of InTheMoneyStocks.com. If you go there, you look for the Research Center. It's essentially geared towards swing traders and investors. You're going to get all different factors there. You're going to get to learn the proprietary methodology. You're going to get swing trade alerts and so forth and so on to make massive amounts of money while the market goes up or down. We couldn't care less. We just trade it and swing trade it and make money on every side of the market. But again, Apple at this stage, I would like to see it float up to the 700 level just based on the even number point, but it is into a major resistance level here. The master level my partner Nick calculated was around the 677 level, and so far that's been perfect. I still would like to see a little float up to 700. I don't know if it'll get there. If it does, I'll be looking for a short. All right. A couple other stocks to look at. Amazon down $1.85. Amazon continues to struggle at the 250 level, which is also a double top. So that's something we have to kind of recognize here. If you take this high, you can see you've really run into that level of resistance and are stalling up there. Amazon's an amazing stock because, I mean, I give all the credit in the world to the company. They make a lot of money in revenue. In terms of earnings per share, I mean, they're trading at 100 plus PE. It's quite something to see. Every other stock out there, you know, that's been around for a long time trade at, you know, I don't know, 10, 15, 20 times earnings. Even Facebook doesn't have, you know, the PE that Amazon has, and Amazon still is able to chug up and be one of the strongest stocks in the market. So truly amazing to see that on Amazon.com. It really is amazing. All right. Taking a look at a couple other stocks out there. Exxon, let's take a look at Exxon, up 25 cents on the day. Not much doing there today, very quiet there. And Chevron as well is trading around the 57, down 57 cents. Chevron looks a little bit weaker than Exxon. Notice how Chevron is now below the 20, and because it's below the 20 from yesterday's close, it's beginning to dip. 50 MA is probably the logical target on that play. All right, one stock I gave out this morning in the chat room, which was an awesome call, was Starbucks. Starbucks is a swing trade or a day trade. Doesn't really matter to me. The point is it worked. 200 MA gap fill right there. Look at the pullback on the daily chart already. If you want to go to the intraday, look at this rollover. This was a beautiful little tail here. Sell off in spirit of bearish pattern. Continue sell off. Great reversal on that trade. I know a bunch of people in the intraday stock chat that took that as a trade this morning and made some good money. So that's where we stand right now. Let's go back to the SPY and just take a quick look. But the SPY remains down 2 cents. Nice little pop here. This is now changing my opinion of the bearish pattern. It's into resistance for a possible quick short off of this level, but the bearish setup is not that good anymore because it's getting too steep. This is something you really must learn and keep in mind in terms of how to channel out the PPT methodology. Price pattern and time is everything you need to know to make as much money as possible in the markets. Essentially, percentage-wise, you'll outperform institutions, hedge funds, everything out there. All right, guys, I got to get back to trading. Come to InTheMoneyStocks.com, take the 7-day free trial, join the pros, become a pro. Take care.